Listen, the world just changed while you were sleeping. It is Monday, January 5th, 2026, and we are in uncharted territory. U.S. forces have captured Nicolas Maduro in a large-scale strike on Venezuela. The headlines are screaming, the markets are panicking, and if you have a single dollar in the S&P 500, you're either going to get liquidated or you're going to make a fortune on the animal spirits being unleashed today. I don't care about your politics. I don't care how you feel about the raid. I care about your money. Right now, gold has surged over 60% in the last year and is spiking again on this news. Oil is sliding because the fear premium is being replaced by the potential for a massive new supply of Venezuelan crude hitting the global stage eventually. But look at your screen. The VIX is sitting just above its lows for the year, but is starting to jolt. Why? Because uncertainty is the killer of wealth. Most YouTube gurus are going to tell you to buy the dip. I'm telling you to look at the cold, hard, ugly data. We are sitting on a 35% probability of a global recession this year, and this geopolitical shock might just be the needle that pops the 2026 bubble. Stay with me for the next 25 minutes, because I am going to break down the exact strategy I'm using to protect my capital and why sticky inflation is the real enemy behind this Maduro headline. Don't move. We are seeing a reminder that geopolitical tensions dominate market headlines, from trade tariffs to Ukraine and now Venezuela. If you are not looking at the data, you are looking at the exit. Before I pull up the Bloomberg terminal and show you the yield curves, I need you to do something. If you're tired of being lied to by the mainstream media, if you want the truth about why you're not getting rich, smash that subscribe button right now. We are building Kevin Strategic to be the command center for the modern investor. Join this community. Hit the bell, because when news like the Maduro capture drops, you don't have hours to wait for a news report. You need the strategic play now. This is about being crystal clear and real fast with the opportunity. If you want the deep dive research and my private alerts, become a member. Now, let's get into the numbers that the banks don't want you to see. I want to see this community grow, because knowledge is the only thing that beats volatility. Look at this chart. This is the 10-year Treasury yield. It rose 5 basis points last week, and it's hovering at levels that suggest the market doesn't believe the Fed can hit at 2%. We are sticky at 3% inflation, and the Maduro capture just made the Fed's job 10 times harder. Why? Because even though oil is dropping today on supply hopes expectations of a fall by 4%, as trading resumes, the instability causes a flight to safety in the long run. I'm looking at the data from the final session of 2025, where the S&P 500 fell into a monthly loss for December. Now we await a U.S. Supreme Court decision on President Trump's tariffs and the choice of a new Federal Reserve chair. You're paying more for everything. Income growth has not kept up with consumption growth, and the savings rate is falling. Low-income households are struggling, pressured by high prices, while high-income households, bolstered by the stock market, drive consumption. This divergence is a trap. As we go through 2026, the theme is waiting for clarity, but clarity comes too late for your portfolio. Data on new market rents might feed into housing inflation, but the cautious optimism on inflation is being tested by geopolitical headlines. You need to know your numbers. If you don't know the math of your own wealth, you don't have wealth, you have a hobby. Let's talk about Venezuela. This isn't just about a dictator in handcuffs. This is about the world's largest proven oil reserves. President Trump has already announced that American oil companies plan to invest billions of dollars to restore production. But here's the catch. Venezuela's infrastructure is a disaster. Experts say improvements could lift output to 2 million barrels a day, but it will take 1 to 2 years just to see meaningful growth. Who is going to win? Companies with deep familiarity like Chevron are uniquely positioned. I'm watching the oil services companies that will be called upon to rebuild the subsea infrastructure. It's a bonanza of opportunity, but reality will be messier than the animal spirits suggest. If you aren't hedged with energy and defense, you are missing the biggest macro shift of the decade. This is about American Business 2.0, accelerated changes, and new retailing norms on a global scale. When the regime changes, the money flows, but only to those who are positioned before the first barrel of oil is even pumped. Now, let's get to the R word, recession. JP Morgan just put out a report giving us a 35% chance of a hard landing in 2026. Most people think 35% is low. I think it's terrifying. In my 40 years of investing, a 35% official probability usually means the risk is actually much higher when you factor in the headline risk we are seeing today. The consumer is tapped out. We are seeing a deceleration in the labor market stemming from both supply and demand factors, including a sharp drop in immigration. Credit card delinquencies are rising. People are worried about job security. The S&P 500 gained 15% over the last 52 weeks, but that growth happened against a backdrop of slowing labor. If the consumer stops spending, the animal spirits will turn into a ghost town. Are you prepared for a 20% haircut on your portfolio, or are you just hoping everything stays fine? Hope is not a strategy. A goal without a timeline is just a dream, and my timeline for your protection is today. But wait, it's not all doom and gloom. If you're a Kevin Strategic member, you know I'm obsessed with productivity. The only thing keeping us from a total collapse right now is the AI supercycle. Companies tell us that AI is transforming the need for workers. We are seeing the beginning stages of a productivity boom likely driven by AI and deregulation. Initial investments in AI are concentrated in data centers. This isn't a dot-com bubble. It's a fundamental shift in how business is done, what I call American Business 2.0. If you're investing in companies that aren't AI first, you're investing in a horse and buggy. Policymakers are worried that above-trend growth could lead to higher inflation. But for the investor, it's about margin expansion. You need to be on the side of the machines. The AI-driven productivity revolution is the only thing that can outrun a 3% sticky inflation rate. Real estate. My favorite topic and my biggest warning. If you are buying a house in high-tax negative migration states right now, you are lighting your money on fire. Mortgage rates are not going back to 3%. Fed funds future suggests little chance of a cut in January. We are in a new normal of rates sitting much higher than the pandemic lows. Look at the inventory. In growth states, high-income households bolstered by the stock market are driving demand, but low-income households are struggling with job security. If you can't make the math work at a 7% mortgage, don't buy the house. A house is a place you sleep. It's not a magic ATM. Stop listening to your real estate agent who just wants a commission. Listen to the data. I've seen these cycles. The people who buy at the top because of FOMO are the ones who get pained the most. Don't be one of them. All right, here is the strategic play for this week. With the Maduro news, there is one sector I'm watching that is totally decoupled from the madness: small-cap energy services that will be called upon for the Venezuelan transition. When the world gets volatile, you move into hard assets. I am rebalancing my portfolio today. I am taking some off the top of my tech winners and moving it into Crisis Alpha. This is how you survive. You don't stay married to a stock. You stay married to the profit. If the data changes, I change my mind, and the data just changed with a large-scale strike and a regime overthrow. We are looking for direction in these market ranges, and I'm choosing the direction of cash flow and tangible energy assets. To summarize, Maduro is captured, the markets are in a shock cycle, and the 2026 recession risk is real. You have two choices. You can be a victim of the volatility, or you can be a strategic investor. Stop buying stupid things. Stop listening to feel-good news. Watch the yields, watch the migration, and for heaven's sake, watch this channel. I'm going live at the closing bell today to see how the Maduro news settled into the Pacific markets. Hit the like button if you learned something. Comment below. I am strategic, so I know who is with me. I'll see you at the closing bell. Don't get slaughtered out there. Get rich.